There is a new proposed tax law in the United States that was recently introduced known as the HIRE Act. This bill was introduced in the Senate by Ohio Senator Bernie Moreno just a little while ago, and it is formally known as the Halting of International Relocation of Employment Act of 2025. And long story short, this bill tries to take an aim at businesses who outsource labor overseas for like an American product or service. So if you're somebody who hires virtual staff overseas, listen up. If this bill goes into law, it would create a 25% excess tax on any outsourcing payments made by a U.S. company to a foreign entity for services that benefit U.S. consumers. So let's say that you spend $100,000 a year on overseas labor. You're now going to get charged a 25% excise tax on that $100,000. So that brings your cost from $100,000 up to $125,000, and those expenses will be non-deductible on your tax return. These outsourcing payments would no longer be tax deductible for U.S. companies/persons. So previously, you spent $100,000 on outsourced labor, you get a tax deduction for that. Say your tax rate's 30%. So after taxes out of pocket, that labor cost you $70,000. Now, you've got your normal $100,000 plus a 25% excise tax. Now you're up to $125,000. And you also lose your tax deduction on that $125,000. So actually it cost you about $160,000 in order to outsource that labor. So your cost just went from $70,000 a year up to $160,000 a year. Now, keep in mind that this is just a bill. It is not even being voted on by the House yet. They're still working on the kinks before they even send it through the House to be voted on and all that political stuff.